Hey friends, welcome to the channel. Guys, in this video I'm going to answer one of the questions which was asked in my previous video, and I'm gonna basically touch upon the details of what I discussed in my previous video. So the topic of this video is going to be how to make, I would say, consistently 30%, because I won't claim big CAGR with a no-brain strategy. Basically with a no-brain strategy, I mean, there's some brain involved. You still need to know how to apply this, but above that it is pretty much formula driven, and 30% is what the book is saying, but you can make close to 50%. This is what something I had achieved in the last 3 years consistently. So the strategy is called the magic formula investing. It's by a guy called Joel Greenblatt, who's the author of this brilliant book called The Little Book That Beats the Market. Now, just before we move on, I just want you to just emphasize upon this thing. When a guy is so big, by the way guys, he's probably a billionaire. He's the hedge fund manager who has the highest track record, one of the highest track records of consistently making close to 50% CAGR for his clients in US. He's the founder of Gotham Capital. Okay, now when a guy so big is giving some wisdom here, we should better listen to it and not brush it off. And this is life transforming, right? And there's a magic sauce, there's a secret, and there's a very clear advice which is there in the investing circles. So if you see, so who's the ideal of investing? For us it is Mr. Warren Buffett, right? And Warren Buffett basically was mentored by Benjamin Graham, and then there are certain disciples of Warren Buffett who followed his ideology and made wealth, and one of them is Joel Greenblatt. Other is this guy of the Dhando investor, Monish Pabrai, and one more I know, Guy Spear. These are the guys who I studied, right? So they practically say one very clear thing, that to make money in the stock market, you have to buy good businesses, and you have to buy them at a discounted price or fair price. Okay, so you have to buy good businesses and you have to buy them at a discounted price. Okay, we'll touch upon this a little later. Now, how these guys become big in stock market? They certainly don't do it through trading. I mean, you can make money through trading, but it's as far as I have read, it is not their vehicle to compound their wealth. So how they're compounding is in small cap companies. Now, why small cap companies? Initially, till their wealth is like till let's say 500 to 1000 crores, which by the way is sufficient for us, because our target is 100 crores to live a great life, in India. But I mean, you can, but easily like 500 to 1000 crores, we will basically have no problem trading small cap trading small cap companies by this approach, right? So Warren Buffett made his initial capital, where he made a lot of returns, close to 50-60% every year in small cap companies. Now the reason why he made this in small cap companies is because small cap companies are very volatile. I mean, the beta for small cap companies is very high compared to the large cap companies. So what does beta means? Beta is the comparative volatility of that stock compared to the Nifty 50. So in small cap companies, if you choose the right companies and you buy them at a fair price, you can make your wealth very, very fast. And this is the essence of this magic formula. So you have to buy good businesses at a discounted price, and it has to be small cap companies, right? And this is what Joel Greenblatt has basically described in his book, The Little Book That Beats the Market. How to do this, I'm sorry. Okay, so how to do this is by including two factors. So how do you find a business is good? If it is generating good return on the invested capital. So return on capital is the first metric which you consider to screen your companies. Return on capital employed for last 1 year. But to make it a little foolproof, although in the book and Greenblatt says it's in his magic formula it's 1 year, but to make it more foolproof, we do it like for last 5 years. Okay, you can make it for last 5 years also. And the second is how to buy it at a discounted price. Is you have to check something called as P is to E, P by E ratio, right? So the lower the P by E ratio, the cheaper the company is, meaning it is available at a discounted price. Now if you reverse the P by E ratio, it is earnings per price, right? And this is referred to as earnings yield. Okay, and so the higher the earnings yield, meaning the higher the earning of a company compared to its price, the cheaper would be the company. So it's just the reverse of the P by E ratio. Now, as I said in the beginning, it's a no-brainer. Don't beat your brain over it. Just use these two things. So what you'll do, and I'll show you now, is you go to a website called screener.in and you type, there's already a formula which you can check out. You can check out the same formula which I'll refer, but you basically make your own query also. So you have to include three things. First, return on capital. Well, I generally keep it close to higher than 20%, mostly 25%. If not getting enough companies above 25%, I make it 20%. Second is earnings yield. Again, I make it more than 20% minimum. If not available, initially I make it above 25%, but if not available, I make it 20%. And the third is market cap, to make it small case. So, and I'll tell you why market cap is important. So I make it above 150 crores. So what you have to do then is, what this formula, when you give this query, it will basically screen all the companies in this order. So you'll have market cap, you have earnings yield, and you have return on capital employed, ROCE. Okay, and you'll have all these companies in the ascending or descending order, whatever order. You can basically click it and have it in descending order. But what this magic formula will give you, it will give you a combined ranking. So let's say the ranking of this company is 10 in terms of, let's say you filtered like around 25 companies, and the ranking of this company is 10, and the ROC ranking is 5, and the combined ranking is what, like 15, right? So it will filter all these companies in descending order based on this combined ranking. Okay, so this is what the magic formula does. And now you have to ensure that you go for lower market cap companies, meaning generally try to avoid companies above 1000 crores market valuation. So 150 crores to 500-700 crores is sweet spot. Okay, so what you have to do is, and this is the strategy, guys, I apply, and I'll put a disclaimer here: don't take my advice, do your due diligence, read the book. I have read the book and I've applied it. It works for me, and I'm only sharing knowledge on this channel. It's not an investment advice by any means. If you don't like me, don't follow me, but I'm just sharing my knowledge. I love sharing knowledge, I love reading, and I just love investing and learning about this and sharing my knowledge about this stuff. Okay, so what you have to do is every quarter, at the end of every quarter, so quarter for me, for us meaning March, just change the color here, March, April, May, June, July, around October and December. So you can have like 3 months gap. It doesn't have to be exact financial quarter, but 3 months gap. You keep doing this ranking using the formula which I've just told you, and I'll show you on screen where to find it. And you make a list of companies, right? And try to have more than 15 companies, right? More than 15 companies, and then invest whatever you initially, to avoid any pain to you. Try to invest the money in every quarter. So let's say you have a total sum of around 1 to 2 lakh rupees. I would say at least 2 lakhs if you're in a job and especially if you're early, right? Divide it into 50,000 for 4 parts, and every quarter make this list and invest, right? 50,000, 50,000, 50,000 and 50,000. And at the end of that year, whether you're making that loss or not, so let's say you invested in March, next March, whether it's making a loss or not, you just sell it and redo the exercise, right? Again, July, you sell it and redo the exercise, meaning you reinvest in the list, reinvest. This is what it is recommended in the formula, but I have my own twist to it, meaning I wait till 50%. This is my way of doing it. You guys can select yours, but this is my way of doing it. I wait till 50%. So sometimes it's a little more than here, but as soon as it is close to 48, 49, 50, 51%, and I see that, I immediately sell it and make a new list the next day. So this is my way of compounding it. You can have your own version of it. Okay, so this is magic formula based investing, and it is the fastest way, in my opinion, what I know of, rather than trading options and some other means of trading futures and options, shorting the stock when you have some insider information, etc., etc. This is the fastest way, what I know, to compound your wealth, right? And I've literally seen, and maybe the market bull run is on my side, I have literally seen more than 50% CHAR on my portfolio, meaning I started with around hardly 75,000 capital, and it has grown to 4-5 lakhs now. It's still compounding, so I don't know, but this is a very logic driven approach. And guys, I'm just an investor who's learning and reading. I am very fascinated by books and the teachings of Warren Buffett, and I'm just passionate about investing. So I'm learning and employing this as a scientist, and it's working really well. So it is based on a very good logic which you can use right away, which Mr. Warren Buffett himself applied, and in Intelligent Investor also Benjamin Graham talks about it, that you have to buy good businesses and you have to buy them at a discounted price. This formula takes care of it. Okay, so I'll just now include some stills for the magic formula, and you guys can take your call whether you want to try this. This is my way of compounding, and how I did it, like for tension free. I never did it with my entire wealth. Like at that time when I started, 75,000 like 2-3 years back is the money I can afford to lose. So it was a no-brainer. I wanted to test out a strategy, and I just tested that out and it worked. So try this and let me know in the comment section below, how did you feel about this approach. And excited to hear results, guys, over the years. So guys, I'll see you again in my next video. Till then, take care, bye bye, and I'll see you again soon. Thanks for watching.